Hey guys, Matt here. So welcome to this week's portfolio update. I like to show my portfolio once a week, sometimes more, sometimes less, as I believe that sets me apart from other, apart from other stock YouTubers out there, and that I show my receipts. And right now, compared to the update earlier this week, it's like night and day. I think we got below 60K on my last one. And so for us to go from that to 64.7K, yeah, I love to see it. I love to see it. And that right there is with the Fed rate hike and stuff like that. And I want to talk about the Fed rate hike just for a second, but not in the way you think. Because, I mean, I'll let people who are good at it, good at finance, talk about the rate hike itself. But I want to talk about a little bit about stock YouTubers out there. And that, now I am a stock YouTuber, and a very, very small one, and I like to give my opinions on stocks, and I will continue to give my opinions on stocks. You shouldn't take anything I say or any stock YouTuber out there, you shouldn't take what they say to heart either. You should agree or disagree, but do not make investments strictly off of them. Now, what am I talking about? I want to take Tom Nash, for example. I want to take this, and this is going to go into this is going to go into my point, I promise you. Tom Nash, I'm subbed to him. He's one of my favorite stock YouTubers. I really love him. I love his videos. I love watching him. I think his heart is in the right place. I really like that. I really respect that. He is much better at this than I am. Fully understand that. However, so when I first joined the Army, I want to digress a little bit. When I first joined the Army back in 2000, I thought, well, we all thought that our drill sergeants were just masters of physical prowess. That's what we thought from our lowly private opinion. You know, I was barely 18. That's what I thought. And that's what that is the image that they portrayed. However, as I got better as I progressed to a basic training, we started seeing holes in what the drill sergeants were doing. We would see signs of them doing things to avoid falling out of their own runs, to avoid falling out of their own push-ups. Now, I'm not saying they were bad people. I love my drill sergeants, and I wish I could find them again. I'm just saying they're human, and they make mistakes. What I'm trying to say here, and this video is a good example, is you shouldn't believe anything what these stock YouTubers say. Not me, not Tom Nash, not financial education, not the financial diet. I mean, no one. Because not a single one of them, and they'll be the first people to tell you, not a single one of them can time the market exactly, or with any measure of precision. For example, this video about Tom Nash talking about watch this before buying the dip. Now, I like the video, and like I said, I'm subbed to him, but he was talking about the next year, when with the coronavirus going into the next year, we were talking about the Fed rate taper, the Fed rate hike, the Fed rate hike and all that stuff, the rising tensions with Ukraine and stuff, as a reason to wait, to not buy the dip, to wait until the real crash, right? And let's be honest, and through the magic of hindsight, yes, the market did see some very big drops, and that is very true. But, I mean, when are you going to buy the dip? What time? Because in other videos, Tom Nash was talking about waiting until the rate hike itself, because that's when stocks were really going to crash. Well, I mean, the Fed hiked up rates earlier this week, and stocks most certainly did not crash. Did not crash at all. They went up as a result. Now, will they crash next week? Maybe. Who knows? That is not for me to say. What I am saying is that the stocks did not crash as an immediate direct result of the Fed hiking rates. So if you were waiting for the crash in order to buy the dip, you potentially missed out on the bottom. Because keep this in mind, you don't know when the bottom hits until the bottom is over. So what I'm getting at here is, in my opinion, and like I said, this is just my opinion, don't take this as gospel, feel free to disagree if you disagree, is that trying to time the market and wait for the real crash is a fool's endeavor. Because Yeah, in hindsight, yeah, the market did crash during specific moments in the whole Ukraine thing. But I mean, when are you going to buy? Were you going to buy when the Ukraine thing started? Were you going to buy when the Ukraine thing? Well, it hasn't ended yet. Are you going to buy when it ends? What about the Fed rate hike? I mean, that's over now, and the market rose. So when are you going to buy the dip now? After the second rate hike, the third one? When is the market really going to crash? Do you know? So what I think is that time in the market is a fool's endeavor. So instead of trying to do that, my strategy, personally, is to wait. I mean, not wait, sorry. My strategy, personally, is to, when stocks drop below my cost basis, I will pick certain ones, the ones I believe the most, and I will put a set amount of money in it each week, as long as that the stocks are below my cost basis. And I will keep doing that until the stocks give me a reason not to, or the stocks rise above my cost basis. And that's my strategy. That's the whole thing. I call it going in dumb, but it's really just dollar cost averaging. And so far, it's doing pretty well. Right now, we got Gevo. Like, let's talk Gevo and Palantir. If you've been following my portfolio, you will note that at one point these stocks were 30%, 40% down, more than that. And for Gevo to be less than 15% down, yeah, I'll take it. I'll take it. Now, we'll see if this continues, but, you know, it's looking better. Same with Palantir. Palantir was 40% down at one point, and so far, we're slowly clawing our way out. Now, ARK is still a little bad with 30%, 36% down, but heck, we were 40% down on that as well. AT&T is clawing its way back. We see Facebook is clawing its way back. Like, so far, so good. At the beginning of this week, I was less than a percent of gains. Like, I was very sure that we were going to be in the negatives by the end of this week, but so far, so good. Now let's take a look at the moves I made. And like I said, I put my money where my mouth is. I show my portfolio every single week. I show you what I buy. And guess what? I bought Palantir, I bought Intel, I bought FedEx, and I bought some Meta. And guess what? I did the same thing last week. And yeah, with the same stocks. Well, with some Walgreens, some Gevo. But I'm going to keep doing this every single week on Monday or Tuesday, as long as these stocks are below my cost basis and the stocks don't give me a reason to stop buying them. Now, will I make as much money as someone who tries to time the market and gets really, really lucky? No. But I think I'm going to do really, really well over the long term. And that's all I care about. But anyways, take care, have a great day, and eat your vegetables.